I'm Jusko from ProudMoney.com. In this video, we're going to talk about what credit card companies don't want you to know. Now, you may see other articles out there in the world or other videos that talk about what they don't want you to know, but in this video, we're going to tell you what they really don't want you to know. None of those other disappointing ones out there. Now, we tackled this a few years back, but some things have changed in terms of how the credit card industry works, and some other things have been added. So we're going to do a little updated look here, and this is going to be the definitive video for what credit card companies don't want you to know. Number one, credit card companies do not want you to know that making only the minimum payment each month is a bad idea for you. The minimum payment means that you're going to end up paying interest on everything that you did not pay off, and that is how people get into debt. Following from that is the idea that if you pay off everything every month, you won't pay any interest at all. There's a grace period where if you pay everything off, you don't have to pay any interest. A lot of people get credit cards for the first time. They think they have to pay interest, that there's just going to be interest charged regardless, but that is not the case. So making only the minimum payment guarantees that you will pay interest, but if you pay everything off, no interest. Number two, the credit card companies do not want you to know that typically you are going to spend more with your credit card than you would if you had to pay in cash. There are many studies that show this to be true. There is more immediate pain when you pay with cash, which means you are going to think harder about the purchases you make than when you pay with a card and you know you don't have to pay it off for a while. Maybe some people are strong enough where they don't spend more with a credit card, but for most of us, that ease of using the card means we are going to spend more than we would if we were using cash. Number three, credit card companies don't want you to know, or at least they want you to forget, that the interest rates on credit cards are much higher than they are on other types of loans. So you could be paying 20 or 25% or even more on a credit card, which you would never pay on a car loan or a mortgage loan. But for whatever reason, with credit cards, people have decided that it is okay. Now, again, if you pay off in full every month, you don't have to pay those interest rates. But for many people, if you carry a balance, you are paying an interest rate far beyond what you would pay with any other type of loan. Number four, credit card companies don't want you to know that their interest rates and their late fees and many other things can be negotiated, or fees can be waived, but it all depends on what company you're dealing with, and it also probably even more so depends on how much leverage you have. If you have been a good customer in the past, that is going to make a difference. Probably even more so is, does the credit card company feel like you are someone that could go elsewhere and be a customer of someone else if they don't keep you happy? If they feel like you don't have much leverage and you are going to stick with them, well, then they don't have as much motivation to help you out. But if you do have leverage, you're more likely to get what you want, especially if you're not someone that asks for those types of things all the time. Number five, credit card companies don't want you to know that when they give you huge credit limits, those are to encourage you to spend more than maybe you normally would, but they are not to encourage you to spend all the way up to those limits. And in fact, if you do spend up to those limits, that is when the credit card company is going to shut you down temporarily or maybe even permanently, depending on how much you spend. Following from that is number six, credit card companies don't want you to know that they can shut your card account down pretty much any time for any reason. So if they don't like something about your behavior, if they see something in the pattern of your purchases or your ability to pay back, anything that makes them uncomfortable, they could decide to close your account. After all, they're lending you money, and if they don't feel like you are going to be able to pay it back, or maybe if they think you're doing something illegal or whatever, they can close you down anytime they want. Number seven, credit card companies don't want you to know that the merchants that you buy from have to pay a fee on every credit card transaction, and because of that, the merchants tend to raise their prices to accommodate that fee that they are going to have to pay. So that means that you, because you are using a credit card, because of the whole credit card economy, you end up paying a higher price. And following from that is the fact that if you don't use a credit card, if you use cash or you use a debit card, you actually are subsidizing the people that are using the credit cards, because you are still paying the higher price, but you're not getting anything in return. Sure, there are some merchants that might give a discount for people that purchase in cash, but those are still pretty few and far between. And in a similar vein, number 8, if you are someone that ever pays interest on your credit card, you are helping to subsidize the people that never pay interest, that pay in full every month. Your money's not going directly into their pocket in terms of rewards, but the credit card companies do an overall calculation of what they can expect in merchant fees, late fees from their customers, and interest charges, and then they pay out their rewards accordingly. So that means that the people that pay interest are helping to make the credit card companies profit, while the people that never pay interest, pay off in full every month, are getting the rewards without paying in. Number 9, credit card companies don't want you to know, or probably more accurately, they are okay if you don't know, that it is not necessary to carry a balance from month to month in order to increase your credit score. Oftentimes, people that are new to credit cards somewhere hear this myth that in order to increase your credit score, you need to carry a small balance from month to month and pay some interest. This is not true. You can pay off your balance in full every month and still increase your credit score, but it's a myth that never seems to die, and as far as the credit card companies are concerned, if you buy into that myth, it only helps them. Number 10, credit card companies don't want you to know that many people never redeem the rewards that they earn on their cards. So the credit card companies know that a good 20 to 25% of people are going to earn rewards and never actually get those rewards. And that factors into their calculations as well. So if you're someone that's getting a credit card, you can't just forget about those rewards. You got to make sure that you redeem them sometimes, or the credit card companies are getting all the benefit from your relationship. Number 11, credit card companies don't want you to know that credit card reward points are not all created equal, so there is no standardized value of what a credit card point is worth. Oftentimes we use 1 point being worth 1 penny as sort of a rule of thumb, but that is a rule of thumb. Sometimes a point can be worth much less than 1 penny depending on how you redeem it. Sometimes it can be worth more. Under certain programs, the points aren't worth anywhere near a penny, but they'll give you a whole lot of points to make you feel like you're getting a lot, and then you'll find out that maybe they're worth only 0.4 of a cent. So if you just look at the points and you think that you can do the calculation in your head in terms of what you're getting, that's not necessarily so. Number 12, credit card companies don't want you to know that a lot of their card offers are essentially the same, just structured slightly differently to see what you will bite on. So they might say 1.5% cash back on everything, or they might say 3% cash back in 1 or 2 categories, but 1% everywhere else. But when they do the math over many customers, they know that they are essentially going to pay out the same amount. So they are giving you sort of the same offer in a different package and seeing which you bite on. And as long as you bite on something, they're satisfied. Number 13, credit card companies do not want you to know that taking a cash advance on your credit card is usually a very bad idea. In most cases, if you take a cash advance, you are going to start paying interest immediately without any grace period, and you are going to be paying at the very highest interest rate, probably higher than what the interest rate is on the purchases that you make with the card. Now, sometimes there are offers that allow you to take a cash advance on certain cards without that being the case, but that is the rule. So in most cases, if you want cash out of your credit card, you're going to be paying an awful lot to do it. Number 14, credit card companies don't want you to know that those extra fees you pay on foreign transactions are unnecessary. So if you're being charged an extra 3% on the purchases that you make outside of the United States, that is a profit center for the bank. They aren't paying that much in order to process that transaction. And in fact, they use the lack of foreign transaction fees on some of their credit cards now as a feature when it's not necessary to charge you as much as they are doing in the first place. Number 15, credit card companies don't want you to know that certain 0% offers are what is known as deferred interest, especially on store credit cards. So they'll give you a 0% offer on the front end, but if you don't pay everything off within that 6-month, 12-month, 15-month period, they are going to charge you interest going all the way back to the date of purchase at the regular interest rate, which is usually very high. Now, this is not true of bank cards oftentimes that are going to give you a 0% on your purchases or your balance transfers at the beginning. It is much more of a store card thing where they pull you in with a 0% offer so that you'll buy a couch or buy a home renovation or some other thing that you couldn't afford to pay up front, and then they'll give you that window. But if you don't pay everything, they're going to charge you all that interest like the 0% offer never existed. And then finally, number 16, credit card companies don't want you to know that other credit cards exist. So they will do everything in their power to make you focus on the credit card that you have with them, even if the rewards they are giving you have become non-competitive when compared to everything else on the market. So they want you to not be out there on the market shopping for new cards. They want you to stick with the card you have. So oftentimes they might do little enhancements to the card that make it better than it was, which keep you happy, but actually those enhancements are worse than other cards on the market that are offering substantially more. But as long as you're not paying attention, the credit card companies are happy. So that is it. Over the last 10 years or so, there has been a lot more in terms of regulation of the credit card companies. So in terms of them having things that they don't want you to know, those might be true, but they pretty much have to tell you those things and they have to put them pretty much out in the open. But it's pretty clear that a lot of people still not paying a whole lot of attention, and that's fine with the credit card companies because credit card operations are a major profit center for the major banks. So if you have any other thoughts in terms of things I should have put on this list, put those in the comments section below. Or if you have any other things that you want to talk about, I would appreciate seeing those as well. Otherwise, I thank you for watching, and as always, please go to proudmoney.com where we do credit card reviews, we talk personal finance, we talk deals, and all sorts of other fun stuff too. If you're not going to leave a comment or go to the website, you might want to watch this video.